If I had to describe today's trading with one word, it would be stick around to find out. What's up guys, Zach here. Today we did not have any news, which also means no catalyst, which can sometimes lead to a choppy day or at least a choppy morning, which is what we saw here. You can tell here by these big wicks on almost every single candle, as well as bars flip-flopping colors almost every other bar here, that this is a range. We're in the morning range, and typically when it's looking like this, it's best to wait to see some better action. Like I was talking about the other day, you won't always see a hammer candle to indicate that something's turning around, and where we were in a choppy morning range with a slight bullish bias, it's best to just buy the next candle. You see the red candle, you buy the next candle, expecting it to be green. There was a couple of those opportunities here. This led me to my first trade of the day, which honestly was just dumb. I originally wanted the pop-up of this candle to short there, and that's why I left my order to sell up there, up high. And it didn't fill, but by the end of the candle ended up coming back up, and for some reason I was just, I don't know what I was thinking. I was like, well, maybe I'll let it fill up here, expecting the close of the candle to be back around where it opened, which, you know, would give me anywhere from 5 to 6 points. And I immediately got stopped out. This candle ended up closing big green, and that was just a dumb way to lose your first trade. This led me into my second trade on this next candle. I have seen many times where when something looks too perfect, in this case, right, this big bullish green candle that came off of push to the lows, it often can be followed by a reversal candle to the other direction. And so I was trying to play off of that. Also, I was a bit upset because I had lost essentially on just a really dumb trade, and so I decided to try and short this next candle as well. And I honestly should have waited a little longer to decide what I was going to do, or even consider going long here, just knowing we had been slightly bullish before and candle looked perfect. But again, in trading, oftentimes if it looks too good to be true, it is, and that was what I was trying to play off of here. The Nasdaq was able to pop over the 700 level. We started to come back down, and I had wanted to catch one of these bearish candles, and I had just been unsuccessful this whole way down. So I thought I would try one more time. If this candle could pop up, I was going to try and short the high of its range. And I wasn't really paying attention as much as I should have to how close we were to 700, because we come right down here close to 700, and that is where it just pops right up, fills me, and then I end up getting stopped fairly quickly. And now I'm down 3 trades on the day, not feeling stellar. There was a couple opportunities I should have taken that I didn't, and we're just looking to try to hit something at this point. After I saw this candle closing very large and right at its high, I was interested in trying to short just right above its close, and I wanted to get some kind of a win in the bag here, so I ended up taking, I think, 6 points, 5 points, just something to give me at least some kind of a winning aspect of the day so far. This next trade, I saw we had started to enter into this range, and at the close of this rangy doji candle, I decided I would try to short maybe just the opening tiny pop of this candle, hoping for a red spike down to my profit target. And of course, there was one more death throw. They're going to throw everyone off, trying to just go just barely above this little range one more time before dumping down towards my profit target. So this one, I guess I should have been more willing to short around the top of the range than where I did. So that is on me. I was willing to give the breakdown of this range one more try after I saw this candle close here in a hammer candle. I was expecting it to go, just 1 point over, and then hopefully we were going to see the dump. And I was also going to hold for about 20 points, which, is about 5R of what I normally do. I knew that this was a 50-50 chance on this candle, which when you're holding for a bigger move like that, that's not so bad, because if I only win that 50% of the time, but I'm making 5 times what I'm risking 50% of the time, that's a great trade setup and system. After the bullish pop, we started coming back down, and I was interested in trying to catch one of these bearish candles. And as the story of the day goes, I was just always a candle behind today. Really was not as sharp as I should have been. And with how bullish the day had been, I really should have always just been leaning to the bullish side this whole day. That would have saved me a lot of struggles. So this one ended up getting stopped out too. I was just hoping to catch that opening pop, and then I wanted to see it drop again, of course, but I didn't get that, and we came up and stopped me out.
Why?
That was the end of the day for me, guys. I had hit minus $200 per account, which for me is my max daily loss that I'm willing to lose in one single day. And it is very important to have a rule like this, because it's very easy to get emotionally on tilt. And instead of having, in my case, a minus $200 per account day, all of a sudden I hit minus $400 in a day, or something that's truly going to make me feel terrible and going to be hard to dig out of. And so it's important to have these types of risk management rules so that you keep your losing days at worst medium, right? This is a medium losing day for me, which always sucks. No one ever wants to be red. But if we keep them smaller to medium, it's much easier for us to dig out and to continue back into the green. So that's it for me. Let me know what you guys thought in the comments. Please like and subscribe. And don't let the market makers get you. See y'all next time.